Welcome back to the channel. My name is Steven. I'm a pharmacist. I own 52 units of real estate, have a $6 million net worth, and net cash flow $10,000 a month. So today I had a great question, which I wanted to ask is, can I discuss what tax strategies I would take advantage of if I were to sell one of my homes? How would you minimize capital gains tax? So in my mind, there's only two ways to minimize capital gains tax that I can think of off the top of my head. So the first one, which is the more obvious one, is a 1031 exchange. So a 1031 exchange is a tax code where you can basically defer all your capital gains tax. So if you depreciate the asset, you can avoid depreciation recapture. If you've made, let's say, $500,000 on the deal, you can defer those capital gains tax. So you're deferring depreciation recapture, plus you're deferring any capital gains tax, which could be significant, right? Depending on how much money that is. And what you do is you do a like kind of exchange. So let's say I sold a single family home for $1.5 million. I have to about 6 months to 1031 exchange that into a single family home, a duplex, triplex, fourplex, apartment complex. For example, that has to be of equal or greater value. So if I sell it for $1.5 million, the asset that I'm exchanging it to must be higher than $1.5 million ideally. So that's kind of the more common way of deferring taxes. But like, let's say for me, for example, let's say I wanted to sell one of my investment properties to then pay off my primary residence, which I'm in right now. What tax advantage would I take of? And I've really been thinking about this. So one of the greatest tax advantages you have is living in a primary residence, because if you claim it as a primary residence, you can defer up to $500,000 in capital gains tax, assuming you're married, right? So I'm, going to be married next year. So I've been thinking, okay, well, let's just say I wanted to sell my first home in Livermore, California, which I bought in 2017. But if I've lived there, if I claimed it as my primary residence for the past 2 to 5 years, then I could sell it and defer up to $500,000 in capital gains tax. So let's break down the example. So let's just say I sell this for $1.4 million, which is what it's worth today, and I bought it for $800,000. So I basically have a net gain of about $600,000. And for me, I've been using it as a rental property. So I've been doing depreciation. So how depreciation works is, let's say I bought for $800,000. The land is worth, let's just say, $400,000, and the structure is worth $400,000. And you would take the value of the structure, which is $400,000, and divide that by 27.5, and that's how much I depreciate every year. So I've owned this since 2017. So you take that number and times it by 7, and that's how much depreciation recapture I would have. So for the sake of this example, because I don't want to do the math, let's just say it's $50,000. So, or $100,000, make it easier. So I would have, if I sold this property, I would have essentially $100,000 in depreciation recapture and what was that? $600,000 in capital gains. So that's a total of $700,000. But let's just say I lived in this property for the past 5 years. So let's just say, 5 years ago was 2019. So let's say in 2019 and 2020, this was my primary. If I were to sell that, if I could basically wipe out $500,000 of the $700K in capital gains tax, I only pay capital gains tax on that $200,000 above. And if, let's just say, assuming the capital gains tax, it's a step up basis, but the max is 20%. So that's about $40,000 that I'm paying that I still have to pay in taxes, but I saved about $100,000 in capital gains tax. So that's the beauty of it. So let's just say now, okay, I haven't lived in that house for the past 5 years. So a strategy that I could do is I could live in more house again for 2 years. Right? But the problem is I have to have a job that's there. So that's the beauty about remote job, right? So I literally thought about this. If I want to start selling my properties, what I would love to do is get a remote job, right? Because once you have a remote job, I can live anywhere. And what I would do is I would move me, my fiance, future wife, into, let's say, my Livermore house. Just live there for 2 years, right? And remember, to be considered a primary residence, as long as you're there majority of the time, right? So you could be there 51% of the days, and then 49% of the day I can still be here in Los Angeles, right? But let's just say I work remote, and I would try to be in the Livermore house at least 51% of the time, or maybe just full time for 2 years. Document that on the tax return, so it's my primary residence for 2 years. And then what I would do is I would then move into let's say my San Francisco house, and then live there for 2 years. And after 2 years, so remember 2 of the last 5 years, then I would just go back here to LA, right? So now I could theoretically sell my Livermore house because I lived there as a primary for 2 of the past 5 years. My San Francisco house, which I lived for the two of the past 5 years, and then sell those properties and defer up to $500,000 in capital gains tax, right? And then use that to basically pay off my primary residence here, right? So that's something that I've been thinking about because I do want a remote job. That would be my dream because it would allow me to kind of tax hack, I call it, like where I'm living in a property for 2 years as a primary. Then when I sell it, I can defer that $500,000 in capital gains tax and do it for my second property. And when I sell that, once again, defer $500,000 and then move back here, claim this as a primary, and then I'm good, right? So that's something that I really thought. That's why I'm really jealous of all the tech bros and tech workers in the Bay Area where I'm from, because you can do that. Like I could literally just like live in each house for 2 years as I plan to sell them, right? So let's say I want to sell Livermore, live there for 2 years. After the 2 years is done, sell it, defer $500,000 in capital gains tax, and then use that money to pay off this house. I would love to do something like that, right? And probably will when I start to plan. Another strategy which I thought of is, fortunately, if I 1031 exchange, if I sold, let's just say, my Livermore house, I cannot 1031 exchange it to pay off my primary residence. What I have to do is I have to 1031 exchange it into a rental property that I'm selling, 1031 into another rental property. But the catch is, technically, let's just say I didn't own this house yet, or I didn't live in this house yet. I could have bought this house. I could sell my property, right, via 1031 exchange, have 6 months to basically identify this house. I could just say, hey, I want to buy this new build townhouse and have the intent to be a rental property, right? So, because I need to have the intent to make this a rental property, take the money, use it to buy this property, right? And then maybe try to rent it out for like a couple months, and then if it fails, or treat it as an Airbnb for like a couple months, and if it fails, then I move into the property. So that's another way, that kind of a loophole that you can take advantage of, the 1031 exchange, where literally you could sell a rental investment property, use it to 1031 into a property that you intend to have as a rental property, right? So, it's the same single family home, townhouse. You have the intent to use it as a rental, whether it's Airbnb, midterm rental, long-term rental, whatever that looks like. And after a couple months, if it fails, right? Let's say I want to make it an Airbnb, so I fully furnish it with the furniture I want. And if it fails, then I just say, okay, well, I'm just going to move into the property and treat it as my primary, right? Because the 1031 exchange, after it closes, they don't care what you do with it after. They only care of what your intent is when you initially buy the property, and then show some good faith in case you get audited, right? Like actually post it on Airbnb, actually post it online, and maybe rent it out for a few days on Airbnb to show that, hey, I tried and it just failed, right? And then I decide to move into the property. So that's another thing that I am considering. If, let's just say, I don't want to live in this house anymore, I could sell my Livermore, 1031 into a property that I want as my future primary residence, but I can initially treat it as a rental property. And then that way I can have, a smaller loan and, paid off house. So that's what I've been thinking about too. So that's another way of, avoiding some taxes. Another strategy is let's just say I sold my single family home, and let's say I had $500,000 in capital gains tax. Well, if I qualify as a real estate professional, and I bought another apartment complex over here, that depreciation could offset the capital gains over here of real estate, right? Assuming I'm a real estate professional. So that would mean that I'm married to my fiance, and maybe I'm full-time realtor, or she's a full-time realtor, right? And then together we qualify as a real estate professional. So let's just say I sold a property without 1031 exchange, and let's say I have $500,000 in capital gains tax, but I have $500,000 in write-off over here. They can offset each other as well. So it's just all really a game. I really do like the, get a remote job and, live in the property for like 2 years as a primary. And then when I sell it, I can defer $500,000 in capital gains tax. So that's the perks of a remote job, is you can literally just, if you have 5 single family homes throughout California, just live in each one for two of them for the past 5 years, and then you can sell it and defer all that tax. Anyways, great question. Let me know if any other questions or comments. If you're looking to buy some multifamily real estate with some guidance, check out the mentorship program. Otherwise, please like, comment, subscribe, and hope to see you in the next one. Thank you so much.